Back then, the issue is that banks were lending out so much money to anyone who wanted to borrow for the sake of investing because the stock market just kept going higher. Well, once the market began topping out, people started selling, panic ensued, people began withdrawing their money from the banks, and the banks couldn't afford to give people their money back because they had loaned it all out for people who wanted to invest. This led to the stock market dropping 83% over almost 3 years, with a nearly 25% unemployment rate among Americans. To make matters worse, tariffs were placed on foreign imports with the thinking that that would help drive demand for locally made products. But in actuality, that entire plan backfired and made the entire situation that much more severe. In fact, the market didn't recover for almost 20 years when World War II offered enough work for the 17 million Americans who were unemployed, at which point the stock market started going up another 14 years with a gain of 815%. Although after that, as the war ended, we saw another drop of 22% now that the government was spending less money and some of those veterans re-entered the workforce but couldn't find enough work. But after that sell-off, we saw 15 years of solid growth with prices increasing over 935%. But then in 1973 and 1974, the stock market lost another 40% of its value. This occurred when President Nixon removed the dollar from the gold standard. This caused prices of everything to skyrocket out of control. The Federal Reserve quickly raised interest rates, and that caused the entire economy to collapse. But eventually, like clockwork, the market recovered, and over the next 13 years, the average gain was 845%. But then we have another one that a lot of people seem to bring up lately, and that would be Black Monday of 1987, when the stock market lost 22% in a single day. However, that one was very short-lived, and over the next 13 years, the market ended up rallying another 800%. Then we have the dot-com bubble of 2001, which was caused by a frenzy of internet-related companies and people buying into them because they thought that the internet was going to be the future. But none of those companies ended up making any money, and when they finally collapsed, they took the entire economy down with them, with a lot of the market falling between 40 to 60%. But even after that, we saw another 5 years of growth, with the market increasing 110% until the Great Recession of 2008. I'm sure this doesn't need too much explaining, but basically banks lent out way too much money to people who couldn't afford it, and when people began defaulting on those loans, banks themselves couldn't afford to pay back their investors, and the banks went out of business. This caused the stock market to fall as much as 40 to 50%, but then we recovered with one of the most profitable and longest running bull markets in history until COVID, when the markets fell another 30%.